What's up, guys? I welcome you in this wonderful video. So let's again speak about v75 on what is happening in the market and how you should analyze and approach your entries. So here I'm on a very high time frame, which is the 4-hour. There is something that I just want to illustrate. We can see here on the 4-hour that okay, the market is moving up, starting all the way down there. It has been moving all the way up. So it's basically an uptrend. Let me just throw it there. It's basically an uptrend, and in the uptrend what you should observe is that okay, currently the market is in a corrective wave. This region here, it's a corrective wave. So meaning our expectation as traders is the market to break all the way on the upper side and go up. So that's an expectation of the high time frame. The market is in a corrective wave, meaning there are higher chances that it breaks and go all the way up. And also we are taking advantage of the fact that the market tried to use this area as a retest. Now, if you can look, although it's not precise, but it's pretty much close. Now, it tried to use this area as a retest, and that happened not just once, but multiple times. It happened here, and then it happened again here, and then the next low was a bit higher. But then I want you to pay attention on what you're gonna observe when we go to a lower time frame. Let me just go. Let me go to the 31st. So here we are on the 30 minutes. Let me just erase a lot of the stuff. So when we look at the price on our smaller time frames, usually the time frames where we trade in, you can observe that what you see here is not what you've seen in the 4-hour. What you see here is more like the market is moving in a range, or more like the market trying to go all the way down. So that's what you can observe. You can either observe a range, or you can see that okay, the market is leaning on the downside. If you can draw a line of intrinsic value, you can see that the line can be a little bit slopey on the downside. So that's what you can observe here. So how should you go about? So here, knowing with the understanding that the market is in a range or is in a corrective wave and like to break on the upper side, firstly what you have to do as a trader, you have to firstly take advantage of the support or of the buying trends, or of the buying waves, not necessarily the selling opportunities. Because what traders will do is that they will wait for the price to come all the way up there, and then they will begin to sell it. It will happen that the price won't go all the way back. Why? Because this is a corrective wave, and it is like that the corrective wave is coming to an end because of a simple reason. This low here, which is lower than the next one. So you can see that now the strength is leaning on the side of the buyers, meaning the buyers, they are starting to kick in. It's no longer pointing on the side of the sellers, just as it did here, a high and then a lower low compared to the previous one. But now we have a low and then we have a higher low, meaning that the corrective wave is likely to come to an end at any time now. So what you should avoid selling there, but what you should do is now to wait for any sign of a low. Now let's say the market doesn't break that area. Let's say it comes all the way here, and when it show you some kind of turning point here, you can then analyze this pattern, and then after it's broken, then you can enter a buy. Why should you look it in that picture? It is because the overall power, the overall strength of the market is on the upward move. So this is an entire corrective. So you'll avoid counter trending correctives. So I hope that one is clear, more especially when we're in a corrective wave which has already persisted for a while. Like this one, it is a pretty matured corrective wave. So avoid by all means to counter trend inside a corrective wave. What you can do, you can counter trend an entire corrective while it's still on its early stage. Now, if you want a counter trend, for an example, you can maybe look for selling opportunities here at its early stage while it's still on the beginning. Even this one, maybe it was better to look maybe for opportunities while it's still on its early stage here. Avoid counter trending when the market is already, or when the wave is already matured, because now it is likely that it can reverse and turn at any time. Again, let me just give you a picture of the 4-hour. So if you can see here, you can even analyze the time it takes for a corrective wave to complete. For an example, this one started here and completed roughly then. So you can see that it took about you can count, but it's few hours. Let me see, it started from 4 and then it was like 16, so it's few hours, around 8 hours, 12 hours. So between 8 to 12 hours, that's where it takes for the wave to complete. So even if you can observe this one, how long it have taken it to reach this stage which it is in at the moment, you can see that it started at 8 and it persisted all the way to this time. So it's a long time. It's a long time. It's around between the same range of this one, between 8 up to around 12 hours. So that's what you should also observe as a trader. Understand how long does the corrective usually take, and then it will be easy for you to see if is it on its early stages or is it on its late stages. So that's it, guys.